Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. Our focus this week is on capital gains tax, CGT Simplified, what every everyday investor must know. This week, we're exploring a significant change coming soon, the revamped capital gains tax, CGT, under the newly signed Nigerian Tax Act 2025. The new tax will take effect in January 2026. It's more than just a minor adjustment, it's a transformation that could alter how you manage profits from various assets including property, stocks, and even cryptocurrency. First things first, what is capital gains tax? In simple terms, it's a tax on the profit you make when you sell an asset for more than the price that you paid for it, such as selling a plot of land, cashing out on shares, or selling a rental property that has increased in value. Our focus will be on the sales of shares. Previously, the tax was a straightforward flat rate of 10% for everyone, whether you were an individual or a corporation. However, starting in 2026, this simplicity will change. The rates will become more personalized, which may result in higher rates for high earners. Let's start with individuals. The traditional one-size-fits-all 10% capital gains tax is gone. Now, your CGT will be based on your personal income tax (PIT) bracket, just like your salary or freelance income. For example, if you're a mid-level earner in the 21% tax band, that's what you pay on your profit from the sale of shares. High earners could pay up to 25% on the highest portion of their gains. The good news is that this progressive system means lower earners pay less or nothing at all. In fact, if your total annual income, including capital gains from the sale of shares, is 800,000 naira or below, you are completely exempt from CGT. This change is a significant benefit for everyday workers, protecting about 33% of them from personal income tax altogether. You need to keep a close eye on your total income, as any gains could push you into the higher tax bracket. For companies, the flat 10% CGT is also gone. Capital gains will now be taxed at the full 30% corporate income tax (CIT) rate, integrating seamlessly with your business profits to eliminate any previous loopholes. However, small businesses have some relief. If your annual turnover is 100 million naira or less and your fixed assets do not exceed 250 million naira, you are entirely exempt from CGT, CIT, and other levies. This helps level the playing field for small and medium-sized enterprises, SMEs, while ensuring that larger businesses contribute fairly. Now, let's focus on shares, where investors like you may feel the impact the most. The good news is that retail investors are largely protected. Gains from selling shares of Nigerian companies are CGT-free if your total proceeds in any 12-month period are less than or equal to 150 million naira and your actual gain is 10 million naira or less. This threshold has been raised from the previous 100 million naira, protecting over 90% of everyday stock traders. However, if you surpass either of these limits, such as proceeds exceeding 150 million naira or gains exceeding 10 million naira, you will incur CGT at your applicable rate, up to 30% for companies and according to personal income tax tiers for individuals. Under the new CGT rule coming into effect from January 2026, investors are exempt from tax on share sales only if both their total sales proceeds are below 150 million naira and their total gain is below 10 million naira within the 12-month period. However, once either condition is exceeded, whether the value of shares sold or the profit made, the transaction becomes taxable. However, if shares sold exceed 150 million naira but at a loss, no tax is paid. In short, the exemption applies only when neither threshold is crossed, but CGT is payable if one or both are exceeded. Let's look at a few short stories to make this more straightforward. Scenario 1. The small investor. Grace bought shares of 5 million naira and sold them later for 7 million naira. Her profit is 2 million naira and her total sale is well below 150 million naira. That means she's fully exempt from CGT. The law protects smaller investors, so Grace keeps her entire 2 million naira profit. Scenario 2. The active investor. John sold shares worth 200 million naira that he bought for 160 million naira. His gain is 40 million naira, and because his total sale exceeds 150 million naira, CGT applies. At his 20% income tax rate, that's 8 million naira tax. But John reinvests 120 million naira of the proceeds into new Nigerian shares the same year. Now, he only pays tax on the 80 million naira not reinvested, reducing his tax bill to just 3.2 million naira instead of 8 million naira. Smart reinvestment saved him nearly 5 million naira in tax. Scenario 3. The corporate investor. Blue Rock Investment Limited bought shares for 400 million naira and sold them 2 years later for 600 million naira. That's a 200 million naira gain. Under the new rule, companies pay 30% CGT, that's 60 million naira in tax. But the company reinvests 400 million naira of the sale proceeds into other Nigerian companies. So only the portion not reinvested, which is 200 million naira, is taxable. That cuts the taxable gain to 66.7 million naira and the tax drops to 20 million naira instead of 60 million naira. Again, reinvestment pays off. Scenario 4. High sale value but loss. No capital gains tax. Mr. David, an experienced investor, sold some shares in 2026 for 200 million naira, which he originally bought for 230 million naira, resulting in a 30 million naira loss. Although the total said proceeds exceed the 150 million naira threshold, there is no capital gain, meaning no capital gains tax (CGT) is payable. CGT only applies when there is an actual profit from the sale, not merely because the transaction crosses the threshold. Scenario 5. Using portfolio losses to reduce capital gains tax. Mrs. Tolu, an active investor, sold 2 stocks in 2026, one at a gain and other at a loss. She made a 30 million naira gain on stock A, but incurred a 50 million naira loss on stock B. Under the new capital gains tax (CGT) rule, she can offset her loss against her gain, resulting in a net taxable gain of 50 million naira. With a tax rate of 20%, her CGT liability drops to 3 million naira rather than 6 million naira. This effective strategy, known as tax loss harvesting, allows investors to utilize losses from underperforming stocks to reduce their overall tax burden while retaining more of their investment returns. So what can we learn? 1. Keep proper records of your investments and sales. 2. Reinvest in Nigerian companies within the same year to reduce or avoid CGT. 3. And if market swings affect your mood, stick to ETFs or fixed income assets. You'll sleep better at night. 4. If you have a high sale value, no capital gains tax (CGT) is applied when you incur a loss. Tax is only charged on actual profits and not on the total sale amounts. 5. If you are holding some stocks that are currently at a loss, you can strategically sell them before the end of the year to realize those losses. This allows you to offset your taxable gains, a strategy known as tax loss harvesting. 6. It's important to track your investment losses carefully, as they can sometimes be used to offset gains from other qualifying transactions within the same period. This can help you reduce the total capital gains tax you owe. The key isn't to make money, it's to keep more of what you make. Individuals pay capital gains tax to their State Internal Revenue Services (SIRS) based on their state of residence, while companies remit theirs to the Federal Inland Revenue Services (FIRS). It's important to know that if proceeds from selling shares are not reinvested in Nigerian shares and instead placed in fixed income instruments, the investor will be liable to pay CGT on the share sale. Additionally, any returns from the fixed income investment will also be subject to the applicable withholding tax on interest income. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comment, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed and have a great week. Bye.